Welcome back to the deep dive. Today, we're going to do a deep dive into the housing market, and we're going to do it through the lens of a major player,
Lennar.
Lennar. Yeah. They're the second largest home builder in the U.S.
Okay, yeah.
We've got their first quarter 2025 earnings.
First quarter 2025, all right.
Yeah, so pretty up to date.
Uh-huh.
And some interesting comments from their leadership that I think are going to help us unpack what's going on.
Yeah, definitely. I mean, everybody's interested in the housing market.
Yeah.
It's so important to the economy.
Yeah.
And everybody wants to know, is it going up? Is it going down? What's
Oh,
happening?
absolutely.
So I'm looking forward to learning what we can glean from Lennar
Yeah, me too.
about the national picture.
So I guess the mission today is to understand this key trend that we're seeing.
Okay.
Lennar is offering a lot of incentives to home buyers right now.
Interesting.
And, I think by understanding that, that might give us a clearer picture of what's happening more broadly,
Right.
particularly in those high volume states
Right.
like Florida and Texas.
Yeah, those are huge markets for them.
So for our listeners out there, this is about getting beyond the headlines and understanding the deeper currents in a really important sector of the economy.
Yeah, I think this is going to be super valuable because, we read the headlines, we hear the news, but to actually dig into a company like Lennar
Yeah.
and see what they're actually doing, I
Yeah.
think that's going to be really, really insightful.
Yeah, absolutely. So the standout figure from Lennar's report is just how much they are spending to entice buyers.
All right, so let's hear about that. Let's get to the numbers.
Okay, so in their last quarter,
Okay.
from the beginning of December 2024, so pretty recent, through February, so just ended,
Okay.
they put aside 13% of their home sales revenue for buyer incentives.
13%.
13%, yeah.
Wow. That's a big number.
Huge number. So I was trying to think about, how to conceptualize that. Let's say you're buying, like a $400,000 home from Lennar.
Okay. $400,000 house.
That would be $52,000 in incentives.
Wow.
I mean, that's real money.
That's a lot of money. That's going to influence a lot of buying decisions.
Yeah, absolutely. So, I mean, when you think about that,
Yeah.
13% number, and you go back and you look historically,
Right.
according to John Burns Research and Consulting,
Okay.
that 13% is the highest level we've seen since 2009.
2009. Wow. That was the aftermath of the financial crisis.
Yeah, the depths of the housing crisis.
Yeah, the depths of the housing crisis. That's really that's concerning.
It's a big signal.
Yeah, it's a big signal. Because obviously things are different now than they were in 2009.
Yeah.
But to see incentives that high again, it definitely raises some questions.
What do you think is behind that? I mean, is it oversupply,
Well, I think back in 2009, obviously there was a huge oversupply.
Yeah.
A lot of distressed sales, foreclosures, things like that.
Yeah.
I don't think we're quite at that point yet, but I think what this does tell us is that there's definitely a shift happening
Okay.
from a seller's market to a buyer's market.
Yeah.
In certain areas, and I think, we'll dig into this more as we go, but I think Florida and Texas are probably two of the areas where we're seeing that the most.
Absolutely. So to get a little bit more context here, we were just talking about 2009. If you go back just a couple of years to the second quarter of 2022,
Okay.
Lennar was only giving out about 1.5% in incentives.
Wow. So from 1.5 to 13%?
I know.
That's a huge jump.
Huge jump.
And that just goes to show how quickly things have changed.
Yeah.
We had this really intense demand during the pandemic.
Yeah, the pandemic was crazy.
Everybody wanted to buy a house. Interest rates were low. And it was a seller's market for sure.
It was crazy.
But now, interest rates have gone up.
Yeah.
Demand has cooled off a bit.
Yeah.
And, we're seeing this shift.
Okay, so what are they actually doing? I mean, what are these incentives? Are they just knocking a few $1,000s off the price, or what are we talking about here?
It's much more sophisticated than that.
Okay.
So they're doing things like mortgage rate buy-downs,
Okay.
which can save buyers a lot of money on their monthly payments.
Makes sense, yeah.
They're doing direct price reductions, of course.
Yeah.
And they're also helping with closing costs,
Okay.
which it can be a big expense, when you're buying a house.
Yeah, absolutely.
So they're really trying to make it as attractive as possible for people to buy right now.
Yeah. So their leadership has acknowledged this.
Yeah.
Co-CEO John Jaffa talked about a, quote, soft start to the spring selling season.
That's not what you want to hear.
No, you want to hear no.
Spring is usually the hot season for real estate.
Yeah, yeah.
So to hear that it's been a soft start,
Yeah.
that's not good.
And he specifically said they had to adjust their incentives to keep up their sales pace.
Yeah, they're having to get creative.
Yeah.
To keep those sales numbers up.
And then the other co-CEO, Stuart Miller, he was even more direct. He was calling these quote outsized incentives for the moment, and implying that they weren't sustainable long term.
Right. So this is not something they can do forever.
No.
They're having to do it now to move inventory.
Okay.
But at some point they're going to have to pull back on these incentives.
Yeah. And he said a more normal level would be something around 5% to 6%.
Okay. Which is still high.
Still pretty high, yeah.
But not 13%.
No. So, okay, I think what we're seeing here is, the market is definitely changing.
Yeah, no doubt.
And but let's get into the regional differences.
Okay.
Because it seems like Florida and Texas are really at the center of this.
Yeah. Well, as you mentioned earlier, they're Lennar's two highest volume states.
Yeah.
So it makes sense that they would be feeling the most pressure there.
Yeah.
And they actually pointed out some specific markets that are struggling. San Antonio in Texas, Cape Coral, and Punta Gorda in Southwest Florida.
Interesting.
So those are areas that we should definitely be paying attention to.
So if we connect this to the bigger picture,
right?
These markets, they saw so much growth during the pandemic.
Oh yeah, everybody was moving to Florida and Texas.
Yeah, all the headlines, everybody's leaving New York, everybody's leaving California.
Right, sunshine and lower taxes.
Yeah. So now it looks like that demand has cooled off.
Okay.
And there's more homes on the market now?
Right, so the inventory is up.
Inventory is up, yeah.
Which means more competition for sellers.
Right, and it also means, going back to, high school economics.
Right, supply and demand.
Supply and demand, when the supply goes up,
prices go down.
Prices come down.
Yeah.
So we're seeing that as well.
Yeah, so it's not just the incentives that are driving prices down.
Right.
It's also just the fact that there's more inventory.
Yeah.
And less demand.
Yeah. So John Jaffa specifically said that homebuyers in Florida and Texas, quote, needed more help than most other markets around the country.
Interesting.
And he said it was because of the slower migration and the higher inventory levels.
Right. So that Sunbelt boom might be over.
Yeah, at least in certain markets.
Right.
So how are these incentives actually influencing prices?
Okay, that's a good question.
So Lennar's average sales price, after you take out all these incentives, went down 1%.
Okay.
From $413,000 in the first quarter of last year to $408,000 this year.
All right, so not a huge drop?
Not a huge drop, but it's a drop.
But it's a drop.
And what they're doing is they're strategically trying to find that price.
Right, where the buyers are.
Yeah.
They're trying to figure out, okay, what's the price point where people are still willing to buy?
Yeah.
And that's what they're aiming for.
Exactly. So Stuart Miller used this phrase. I thought it was interesting. He said, cutting net effective prices through larger incentives to find the market and keep sales rolling.
Okay. Yeah, that's a good way to put it. So they're not just trying to make a profit on each individual sale.
Right.
They're trying to maintain their volume.
Yeah.
They want to keep those sales numbers up.
And it looks like it's working.
Okay.
So despite this choppy sales environment, their net new orders for the first quarter of 2025 were almost the same as the first quarter of last year. So 18,355 orders this year versus 18,130 last year.
Okay, so basically flat.
Basically flat, yeah.
So it seems like their strategy is working. I mean, they're selling the same number of homes, even though the market is tougher.
Yeah, and Stuart Miller actually said this. He said, quote, we're going to adjust to the market. We're going to maintain sales volume.
So they're being very deliberate about this.
Yeah, it's a choice.
It's not like they're being forced to do this.
Yeah.
They're choosing to do this.
Okay, but this has to have some impact on their business, right? I mean, if they're giving all these incentives away, that must be cutting into their profits.
Yeah, absolutely.
Yeah.
You can't just give away money and not expect it to affect your bottom line.
Right.
So their gross margin in the first quarter of 2025 was 18.7%.
Okay.
Now, that sounds pretty good on the surface, but the report actually highlights that this is their lowest gross margin in over a decade.
Lowest in over a decade.
Yeah, so that's significant. And it wasn't entirely unexpected.
Right.
Their CFO, Diane Bissett, had said back in December that they were expecting some margin compression.
Okay, so they saw this coming.
Yeah, they knew that the market was changing and that their margins would probably take a hit. They had projected gross margins to be between 19 and 19.25% for the quarter.
Okay.
So the actual result of 18.7 was a little bit lower than they were expecting.
Yeah, a little bit.
But not a huge surprise.
And Stuart Miller has already said that he expects even more pressure on their profitability in the second quarter.
Right. So they're forecasting a gross margin of about 18% for the next quarter.
Wow. So those huge profit margins that homebuilders were enjoying a couple of years ago?
Yeah, during the pandemic.
Yes. Those are gone.
Yeah, that was a unique time.
Yeah.
Demand was so high and supply was so low that builders could charge pretty much whatever they wanted.
Yeah.
But those days are over.
So we're in a new environment now.
Yeah, it's much more competitive now.
Yeah.
And builders are having to, to offer more value to buyers to make a sale.
And that means lower profit margins.
Right. And I think we're going to see this trend continue for a while.
Okay, so let's switch gears a little bit. The report also talks about tariffs and changes in immigration policies.
Yeah, these are big issues that are affecting a lot of industries.
Yeah.
Including housing.
Yeah. And Lennar's, one of the biggest players.
Right. So their perspective is valuable.
Yeah. So they're saying that current tariff policies have not really impacted their business yet.
No.
John Jaffa said that they've been talking to their supply chain partners about, alternative sources, different materials.
Right, so they're trying to be proactive.
Yeah. And they're also working with their trade partners to, prepare them for the possibility that they might have to absorb some cost increases if tariffs do become a bigger issue.
Okay. So they're not just sitting around waiting for something to happen.
No, they're trying to get ahead of it.
Yeah, that's smart.
But as of right now, they're saying it's not a big deal.
Okay.
And then on the immigration policy side,
okay,
they haven't seen any disruptions either. So John Jaffa said that because they do so much construction, their projects are a priority for their trade partners.
Right. So they're not having any trouble finding workers.
Yeah.
Or getting their projects done on time.
Yeah, he said they're not seeing labor shortages or any impacts on their cycle time.
Okay, so they're not feeling the effects of these policy changes yet.
But it's interesting because we do know that a large percentage of construction workers in the U.S. are undocumented.
Yeah, that's true.
And that's according to, groups like the Pew Research Center and the Center for American Progress.
Right.
So even though Lennar's not seeing a problem right now,
right,
it does make you wonder what would happen if, there was some big change in immigration policy enforcement.
Yeah, that's a good point. I mean, Lennar's a big company.
Yeah.
They have a lot of leverage.
Yeah.
But smaller builders might not be so lucky.
Yeah.
So it's definitely something to keep an eye on.
Yeah, definitely. Okay, so big picture, what do you take away from all of this?
All right, so the key takeaway here is that the housing market is cooling off.
Okay.
And Lennar is responding by offering big incentives to buyers.
Yeah.
Especially in Florida and Texas.
Yeah, those seem like the key markets.
Yeah, those are the markets that are really feeling the pressure right now.
Okay.
And Lennar is basically saying, we're going to do whatever it takes to keep selling homes.
Yeah, they're prioritizing volume
right.
over profit margins.
Right. They're willing to accept lower profits in order to keep those sales numbers up.
And for our listeners out there, this is what's happening on the ground.
Yeah, this is real-time data from a major player in the housing market.
So if you're thinking about buying or selling a home, this is really valuable information.
Absolutely.
So to wrap things up, here's a question for our listeners.
Okay.
Given what we've learned about Lennar, what other things should we be looking for to assess the health of, our local housing markets?
Yeah, that's a good question.
And what are the bigger implications if more builders follow Lennar's lead and they start prioritizing sales volume over profit margins? I mean, could that shift the balance of power?
Yeah, potentially.
Between buyers and sellers.
Yeah, that's definitely something to think about.
Yeah. All right. That's it for our deep dive today.
Thanks for having me.
Great to have you.